My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. People make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate, teach. Call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Suddenly, all is forgiven. Or if not all, then at least most is forgiven. I'm talking about the incredible resilience in this market, fueled by a recognition that so many companies are simply better than what Wall Street thought. So we need to stop turning against them every time there's a single seemingly bad data point. Every day I come in work and I'm just dazzled by the resourcefulness of executives who do their best to create value for you, the shareholder. Lots of stocks go up on days like today, where the Dow advanced 235 points, S&P gained 0.75%, Nasdaq jumped 1.0%, simply because of good management and excellent execution that too often goes unnoticed. Listen, I'm not a Pollyanna. I can hit CEOs with withering questions if I have to. Some of them deserve scorn and skepticism. But there are plenty of brilliant, hardworking CEOs with incredible, hardworking teams, and you ignore their hustle at your own peril. Now, this often gets lost in the shuffle when we're focused on the parlor game of guessing the Fed's next move. A quarter, a half. Hey, you know what I say? Let's get serious. Terrific companies do not get caught up in the quarter-half shuffle. Case in point. Today, we got results from Kroger, the nation's largest supermarket chain, is trying to buy Albertsons despite harsh resistance from the regulators. Now, you might think Kroger would be distracted as it tries so hard to close on this deal, and that's what many analysts certainly assume. But it turns out the reverse is true. CEO Rodney McMullen's managed to keep food costs down and deliver fantastic numbers, all while maintaining an expensive unionized labor force in a very uncertain commodity environment. How? I think that Kroger confounded the critics by developing a superior loyalty program, regionalizing their stores, and creating some of the best store brand private label products out there, second only to Costco. Food's still expensive, but cooking at home is far cheaper than going out. McMullen tells us that the consumer is no longer flush, and that goes double for his most budget-conscious clientele, and he's got one. Now, though, he points out, quote, budget-conscious customers are buying more at the beginning of the month to stock up on essential items and groceries, and then as the month progresses, they are more cautious with their spending, end quote. Wow, that's a tough environment. And when I heard this, I thought back to the old Kroger, the one that would perpetually miss its numbers whenever the environment got a little tough. Everybody else remembers the old Kroger, too. Maybe that's why the stock was just sitting there waiting to be had until the quarter was reported, and it soared more than 7% in response to the fabulous results. Everybody thought Kroger would drop the ball like they used to, but McMullen's finally whipped his supermarket into shape, hence the amazing rally in KR. Now, as stocks go, this is a pretty straightforward story. We all need to eat, so it's not that hard to get your head around the grocery business. But it's quite different when it comes to tech, where the analysts are constantly doubting the resolve and perspicacity of CEOs who simply know far more about their own business than the critics. In tech, the complexity is such that Wall Street often reaches conclusions that have little to do with reality. Consider the case of Amazon.
All aboard!
The most important component of Amazon is not the store for everything. It's Amazon Web Services, AWS, because their cloud infrastructure business has the best gross margins and can produce the biggest upside surprises. Sure enough, after a couple of suboptimal quarters, what management called optimization, which is tech speak for customers who committed fewer dollars because they were worried about the economy, the web services business has exploded. It keeps getting better and better thanks to generative AI. And that caused me to love Amazon's last quarter. But the street hated it. Sell. Because Amazon Prime had a couple of weak shopping days, including an otherwise great Saturday where business slowed down because someone tried to assassinate former President Trump. Soon after then, the nation was transfixed by the Olympics, so Amazon feared that could slow impulse spending, too, until they were over and maybe bounce back. Next thing you know, the stock, it is in free fall. Falling from 184 to 154. I was jumping up and down telling club members of the investment club, just go buy it. We bought it ourselves for the charitable trust. I made it clear that I had total faith in CEO Andy Jassy, and it's just business as usual at Amazon. Oh, I know I came off as a houseman for Amazon. I was aware of that. I was walking around the beach. Oh, he still loves Amazon. But I really don't care. You see, Jassy's a little like Coach Andy Reid from the Chiefs. You can expect him to do what's necessary to win. Today, Amazon stock traded back above where it was before the so-called horrendous quarter. You were rewarded if you stayed with it, and you bought more when they were just giving away the darn stock. How about Broadcom? Yes, one of the hardest stories to understand because there are many moving parts that aren't well known. In fact, unless you study the underlying plumbing that extends from the data center to the internet or from the cloud to the data center, you probably not even know Broadcom's core growth driver. When these guys last reported, the stock fell from 153 to 137, even though it beat expectations, because people didn't like what they heard about the AI portion of the business. Of course, Broadcom told you that its AI biz remained in turbocharged growth mode and that its VMware acquisition, the business I was actually worried about, had turned the corner and gotten very strong. Almost nobody listened when the company told you all was well in AI. I was not concerned about the AI division. Why? Because Hock Tan, the bankable CEO of Broadcom, told us not to worry. He told us the AI business was going to accelerate. Instead of joining the negative fray, I said to myself, why should I doubt this all-time great coach when he's been right for ages? Now the stock's up to 164 and change, well above where it was trading right before the so-called bad quarter. If you'd simply given this tremendous CEO the benefit of the doubt that he deserved, you could have made a fortune in less than a week. Naturally, best for last, Nvidia, where we got a huge quarter last month, yet all we heard was how disappointing the numbers were. Yeah, cancel the watch parties, Nvidia. No more tailgating for Nvidia. The stock was traded about 126 before the quarter was just laid to waste. It fell to 102 at its lows last week. The world had given up on it. But they didn't even know why or how. They didn't even know what Nvidia does. They certainly can't pronounce it. They pronounce it like Nivea cream. This week, those who panicked and dumped the stock, well, guess what? I think they're trying to remember why the heck they did something so stupid. We've now learned that demand is so strong for Blackwell that that's a new supercomputer chipset that is shipping in volume, that CEO will this year. CEO Jensen Huang says clients, I love this, are getting emotional about it, emotional about allocation. That sure doesn't sound like NVIDIA's got a demand problem, as many critics speculated at the time. It sounds a little more like, hey, they got too much demand. Plus, Jensen talked about the other huge part of the business, accelerated computing. No one talks about that, which uses NVIDIA's ultra-fast graphics processor unit to handle anything intense, rather than the CPU, which is usually made by Intel. Much more energy efficient that way, not to mention way, way faster and cheaper when it comes to energy consumption, which has become the key variable when we're talking about the total operational cost, TOC, of semiconductors. Next thing you know, the stock's at 119. Can it get back to where it was before the so-called horrendous quarter? Can it get back to the 127? I don't know. All I can say is, why not? Look, it's right to be skeptical when you're investing. It's right to be jaundiced. But the bottom line, not every executive deserves the same level of skepticism, if not scorn. Some CEOs have earned your trust. When we're talking about execs like Rodney McMullen from Kroger, Andy Jassy from Amazon, Hock Tan from Broadcom, or NVIDIA's Jensen Huang, I'm giving them the benefit of the doubt. Maybe you should, too. Why don't we go to Ian in North Carolina? Ian.
Jimbo, how we feeling?
I don't know what's shaking with you, Ian. I'm feeling pretty good. It's happening.
Yeah. Every day's a holiday.
Really? I hadn't thought about that. What holidays today? What were we celebrating?
We got football back on. I know it's week 2, but hey.
Right. North Carolina's got the Panthers. I forgot.
Yeah, we're real excited about that, Jim.
Yeah, everyone is. We're just I'm taking all your guys in fantasy because I'm trying to throw my league. Then everyone will love me, right? Everyone will love me. I'm just throwing the games. Okay,
yep.
Let's go to work.
Cool. One of my old favorites from the COVID era is up 21% this year. With rates dropping and a large short interest, do you think now is a good time to double down on Upstart?
I think that's tough because if the economy gets tougher, Upstart will get hurt. I do prefer, if you're in that area, a firm, which I think is doing quite well. And Max Levchin, you know what? He's delivering. People were skeptical. He's delivering. Mandy in Maryland. Mandy.
Hi, Jim. How are you?
Mandy, I'm pretty good. Every day's a holiday.
Oh, that's wonderful. Glad
I just thought of
it. Love your show.
Thank you.
For teaching us how to invest.
Oh, thank you. You know what? That is the goal. You hit the goal. You're very kind. I expect everyone to learn, emulate, and they'll be teaching the next generation. How can I help you?
I have a small position. I bought 8 shares at 180. Shall I keep buying or should I just stay put and hold on to what I have? The stock I have in mind is NXST.
Next Star Media. You know, I saw Parisuke at dinner. I was at a restaurant recently at Porterhouse, and I just congratulated him. He's doing such a great job, and the answer is you should buy more. Buy another 2 before the election. I think it's definitely the right place to be. Thank you for the kind words. Okay, listen to me. In this market, I think it's worth giving some CEOs like Hock Tan, Andy Jassy, and Rodney McMullen the benefit of the doubt. I think you should too. I didn't be too flip about every day's a holiday, but I had it in my head and I really liked it. Anyway, on Mad Money tonight, we get calls all the time asking if Kava could be the next Chipotle, so I'm going straight to the source with Kava's CEO to see where the fast casual chain stands in the pursuit of growth and pursuit of value. Then Callaway merged with Topgolf, and let's just say it's been a big mess that unfortunately I got wrong. I got to own that. A lot of stocks to do right, some stocks to do wrong. And Signet Jewelers shine bright like a diamond in today's tape, and I'm getting the latest in the quarter with the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.